Hey guys, I'm Phil Town from Rule One Investing. Today I want to talk to you about what causes the stock market to go up, and down. What is that? So everybody knows the stock market is changing all the time. You look at it on a day-to-day basis, you see a lot of fluctuation in the prices. You look at it on a month basis, there's prices fluctuating. What I want to do is talk to you a little bit about what causes this market to fluctuate. What makes it go up and down? And also, is there any way we can understand how to take advantage of the things that make it go up and down in order to create wealth? That would be, I think, what I'd like to try to do with you guys today. So let's start with this. There's a quick resource for you guys right here. If you want to prepare a portfolio that's based on these principles that can handle anything the market throws at it, I take a look at this, what we call my Big Five Numbers Guide. It shows you what numbers are exactly that you need to look at. There's just a handful of them that you need to look at to determine if a business is a smart investment. So all you have to do is just head down to the link, and it's there in the description, and just download it. Now, if you're new to investing, I want to kind of help you understand this wild thing called the market, okay? This wild thing called the market. So let's get started. First off, maybe the best way to understand the market is to think of the market as a person, that there's this character out there who's almost like your partner. In other words, your partner in your let's call him Mr. Market, okay? Your partner, Mr. Market, is going to be the most cooperative partner you could ever imagine. Your partner, Mr. Market, is ready to basically sell you anything you want to buy and buy anything you want to sell. The only thing is Mr. Market is going to set the price. So he's a ready buyer or a ready seller. And obviously, if you've ever done any kind of buying and selling at a flea market or in real estate, a ready buyer and ready seller, those are hard to come by, right? So the market is extraordinary in that regard. It's like, wow, I got this partner over there, Mr. Market, who's ready to buy or sell at any split second, which is amazing, right? But the catch is, of course, he gets to name the price. So what is that guy like, if we're going to think about Mr. Market? What makes Mr. Market change the price up and down? And one view of Mr. Market is that Mr. Market is actually a manic depressive character. Manic depressive character. What makes Mr. Market price things when Mr. Market is on his meds, or her meds, I guess to be fair, is that the value of a business should match its price. In other words, businesses have real value. They're not like a Picasso or a grand piano or an old baseball card. Businesses have value based on the cash flow that they throw out there, or on the cash flow they're going to throw out into the future. Now, what Mr. Market does is, over a long period of time, is he's very, very good at putting the price on every single company out there in the market at its real value. Mr. Market will do that. And so Mr. Market is always knowing that his job is to price things at their real value. That's his real job. So what makes the market go up is that all the companies in the market have an increase in their real value. And what makes the market go down, at least rationally, is that all the prices in the market have a lower value. So Mr. Market should theoretically, if he's being rational, price things according to their real value. Now, the problem is that Mr. Market isn't rational all that much. Mr. Market is manic a lot of the time, and sometimes very depressed. When Mr. Market is manic, man, he's like Annie. The sun's coming up tomorrow every day. The sun is there. There's just nothing but good news out there in the marketplace every single day. It's just getting better and better. Woo, better and better. Manic to the point of irrationally exuberant, right? So Mr. Market, when he gets off his meds, can become massively irrationally exuberant. And when that happens, he starts putting prices on things that are ridiculously high above their value. All right. Now, the other direction Mr. Market can go when he's off his meds is to get massively depressed. And often one of these things follows the other. Mr. Market gets massively rationally exuberant and then crashes into becoming depressed. And when Mr. Market is depressed, he's very depressed. The sun will not come up tomorrow. Everything is totally horrible. There's no hope in the future. And in that case, Mr. Market starts pricing these companies way, way below their real long-term value. And what we need to understand is that just these three qualities of Mr. Market are the critical things. Sometimes he's going to be irrationally exuberant, sometimes manically or terribly depressed, and sometimes he's pricing things normally, properly, where the price should equal the value. And in the long run, that's what Mr. Market does. So how can we use that as a Rule 1 investor? Well, this is fundamental to understanding Rule 1 strategy. This concept of Mr. Market is at the heart of everything Ben Graham and Warren Buffett have been teaching us as investors for the last 100 years. Right at the heart of it. Because think about it. If Mr. Market is going, if you don't have any investments right now, but Mr. Market gets massively depressed, and then you decide, you know what, I think I'm going to start investing. You're stepping in to buy companies that are already massively on sale because Mr. Market has gotten depressed. You're buying these companies on sale, which gives you a huge edge on making money in the marketplace. Because if they're on sale and Mr. Market eventually puts them back at their real value, then they're going to go up. No matter what they do, they're eventually going to go up. So that gives you enormous confidence that eventually you're going to make money. And that is so fundamental to Rule 1 investing. And what about the other side of Mr. Market's manic depression? Well, when Mr. Market gets manic, then he starts pricing things ridiculously high, right? Well, if we own these companies already and we bought them really cheaply when he was depressed, then when we want to sell them is when Mr. Market has become irrationally exuberant. We want to sell them when the prices are through the roof, ridiculously high. And if you'll think about what that does, is it gives us really a two-edged sword. In the first place, we're buying something with a huge margin of safety, massively on sale. And in the second place, we're not selling it for what it's worth. We're selling it for way more than it's worth if the market goes into irrational exuberance. One could argue very strongly that today the market is irrationally exuberant. If that's the case, Rule 1 investors would be looking to be selling companies to Mr. Market, who's willing to buy them at absurd prices, and then wait in cash until we get an opportunity for Mr. Market to get depressed and we can buy the same companies back. If you've read my book, Rule Number 1, and been following podcast, you'll notice that we keep buying Chipotle Mexican Grill over the decades, over and over again. And it's really fun when you can keep making great returns on the same great company over and over again, because you just know that Mr. Market is going to go through these fluctuations. He's going to get depressed and he's going to get exuberant. And in the middle, sometimes he prices things properly. So that's basically it for Rule 1 investors, you guys. It's very, very simple to understand what Mr. Market is doing. You can just look out there and see that the market prices are astonishingly high. And, you wait, or you stay in cash, or you sell in those kind of markets. Now, there's a lot more we can do too, and we teach that, of course, in our courses. But I'd love to hear from you guys. Have the fluctuations in this market influenced you to panic or get irrationally exuberant in the past? And get, you panic and sell out when things are too low, and get irrationally exuberant and sell it when they're too high, right? Or actually, that'd be the way to go. Anyway, leave it a comment with your answer, and I'll be sure to follow up with you guys. And thanks for watching. Now go play. Hey, if you enjoyed this video and you feel it was valuable in teaching you more about stock market fluctuations, just hit the like button, guys, and share this video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen. We got a free gift for you. So thanks again for watching.